Everybody. Real quick, I just wanted to do a breakdown on Bitcoin. Today, it's what May 31st. Bitcoin is currently at $37,154.20. What we're looking at is the weekly time frame, which this candle right here opened today, and as you can see, it's 6 days and 2 hours left. Now, what I want to point out is a couple things here with Bitcoin that, as you can see, let me get my arrow real quick. As you can see, price is above the green 200-day moving average. Price is here. This green bar right here is above the 200-day moving average. So we know from a weekly standpoint, Bitcoin is still in a bullish trend, even though we had this big correction that came down and followed. But as you can see, let me see something. As you can see here, this is a strong level of support that price once made in the past. So we'll draw a line here, draw a box from here to the body of this candle right here, which was on the 17th of May. Why? Because all we're doing is creating a roadmap to show us, okay, where is where price and where could it potentially go. So back here on January the 18th of 2021, we came here and we tested the zone. And from this test, we bounced back up and we made a high at 64, above 64K. And now price have found its way back down here. Now, what I want you to notice, something very significant here, is that only weekly, the bigger the time frame, the stronger the validation. So what I want you to see is that this red line is a form of support. This yellow box is a form of support, which simply means that sellers try to bring price down into the zone. And when they came here, they found support where they couldn't break and close below. So right now, starting a new week out, we got another bullish candle that's formed. And even though this candle right here will not close for another 6 days, it's showing us that we are technically on a weekly, we're technically still bullish. But this is the thing. See this yellow and blue line? This right here is what's considered a ceiling, a resistance, that this green candle can push all the way back up here and reject off the zone, come back, test again, or break through. So right now, it wouldn't be safe from a weekly standpoint to try to trade this, for a buy, unless you simply scalping and you going from this entry to the yellow line or whatever. But if we go down on lower time frame to the daily, you see we get more details. And as you can see right here, look how strong this level is. That every time price came into it, it bounced. It bounced. So now you come forward to over here and look, price is just playing. Look at the wicks. It's playing in the zone. So that let me know that this is a strong zone of support, which is good for the buyers and good for investors as well, because with us knowing that this is a strong level of support, it's a possibility that we can break back above and continue our trend back up to 64K again. Now, the strategy that I teach, the first thing that I'm looking for is this green line. Now, remember, on the weekly time frame, which is here, price, which is the candle right here, is above this green line. So I know that we're bullish. When we go to a smaller time frame, which is the daily, price is here and it's below the green line. So that let me know that we're bearish. So right now, on a little time frame, I know I wouldn't be buying right now as well, because price is below this green line. Let's go down to the 4-hour. The 4-hour as well. See, as you see, as we scroll down, we get more data. The 4-hour as well. The first thing I'm looking for is this green line. Price is here. This candle right here. Price is below this green line. So I know that sellers are still in control. Even though we have all the support in here, buyers are holding this area, real tightly. So as far as an investor, for buy and hold, uh, these zones down here, the zone down here would be a good zone to buy for long term if you planning on holding the coin. But for a trader, for me to trade this, what I will need to see is this right here. I will need to see this blue line, cross above the yellow and above my red line. And once that happens, and this meter as well needs to be a light green, and right here on this meter, as long as we stay above the 50 and we stay above the zero right here, then I'll buy. As of right now, we got to sit still because it's not a buy setup as of yet. Let's go down to the 1 hour time frame and see what we see. So for a 1 hour time frame, you also see it as well. Each one of these candles represent 1 hours. So what do I see when I come down here? I see prices currently here, okay, but price is still below this 200-day moving average. So we're still in a sell position. Now, this blue line, it is above the yellow and red. So that's good. That's showing that buyers are trying to gain momentum. But what I would need to happen is for this blue line to cross this green line. Now, given on a weekly time frame, the weekly time frame is bullish. The daily time frame and the 4 hour time frame is bearish. The 1 hour time frame is currently bearish as well. But if this blue line crosses above this green line, that could be a potential buy on a lower time frame. On a lower time frame. But what you need to keep in mind is this right here. Price will, if this crossover happen, the blue cross the yellow, the blue cross the green, right here. If this blue line cross above here, and we get light green on the meter, and our white line still above the 50, and we still above the zero, we could look for a potential buy opportunity to get in for a buy, and we can just target these different levels right here for take profit. That could be an option. Now switch to my Hikanashi candles. As you can see, buyers down here, we got a buy signal right here. On the 31st at 06 in the morning. But if you look down to the meter, as you can see, the red line was below the yellow line. We wouldn't have got in. The red line need to be above the yellow. The white line needs to be above the red and green line. And we need light green on the meter. For we could have took maybe a potential buy, but it would have been a scalp because we still below this 200-day moving average, as you can see. So had I got into this trade, once I saw a proper setup, let me see. That's not a proper setup. All right here, you got the green line above the yellow, white line above the red and green. You got a light green on the meter. You got a flat bottom green candle, and in blue it's above the yellow and red. Right here will kind of be a kind of risky trade to take because you got this level of resistance right here. So you would have gotten this trade right here, and price is struggling right now to break the zone. So you potentially could be just in a consolidation right now, which you really didn't make no money. So the best thing to do is wait for the complete crossover of the blue crossing the green line. Now, as far as the strategy goes, this is what I look for when I come into the market. So let's just say right here was the time that I came to look at the chart. If you look straight down, you'll see the date and the time. So what I do is when I come into the market, what I'm looking for is this. I see that we're below the green line. This candle right here at 2100 was below the green line. The next thing I notice is that the blue line is below the green, yellow, and red with this candle. That's the next thing that I notice, right? Then I look down here and I see that we have dark red on the meter, which signifies strong sellers. That's a good thing. Then I look right here and see that we're below the 50, our 50 line, and we're below it, then the last thing I look and see that right here we're below the yellow, the red lines below yellow. So all those signifies a sell. So I would have entered this trade right here off this candle right there at $38,526 right here. Now, how would I manage this trade for my stop? So if I'm anticipating price to go down, then that means price cannot go up unless I'm losing money. So if I got in here, I would have placed my stop. I would have looked for the last high. This was the last high. So what I would do is I would place my stop, get my ruler, I'll measure this high right here, and I will go 100 in this Bitcoin. So, or you can go from this high. Let's say if you go, let me see. If you measure this wick right here, 32. Let's see. Say if you put it at 100 above. So like right there. So that's 40, 55, 55, 40, 55, 55. Someplace up in there. This is being stop loss. See, this was the last high right here. So we don't want to put it on here. We just want to go a little bit above, and you can just go above this, above the sell signal. How about that? So now we're in this trade. This is our entry right here. This is our entry because we got all our confirmations met. This right here would be the stop loss. Is me telling the market that if I'm wrong about the sell, take me out here. This is how much money I want to lose. All right. So how long would I stay into this trade? Well, what I do is I'll wait until I see this blue line cross above the yellow line. So all this right here, I'm making money. I'm making money. It pulled up, it never crossed. So I'm still making money. All the way down here, I'm making money. Then we came back and the crossover happened here. So I would have got a trade once this candle right here closed. A green candle, a bullish candle, always open from the bottom, close to the top. So this is where I would have got out at the top of this candle right here. I would have took profit. Um, so this is where I would have took profit at. Now, so then what I could do, you could calculate how much money you would have made off that trade. And all you have to do is calculate from your entry to your take profit. So I'll go from this blue line where I entered down to this green line. That was a total of 2,551 points. Now, if you made 2,551 points, let's just say you were doing a 10-cent lot size. Let me see. Where's my... Alright. Let's say you was doing 10-cent lot size. So 2,551 points you would have made times a 10-cent lot, which it looked like this because you moved the decimal one page to the right, equal 10 cents. So you would have made off this trade once you exit your position. Let's see, 2551 times 10 cents. You would have made $255 and 10 cents had you did a 10-cent lot. Somebody else could have had more money in their account and could afford to risk more, and they maybe risked it $1, right? So $1, obviously, $1 times that would be 2,551. Hold on, put too many fives. Yeah, so 551 So right here, this person would have made 2,500 off a dollar. Then just say you had somebody else, and I'm sorry, a dollar look like this in your lot size. I don't want to confuse anybody. So it'll be 0.10, and then you move the decimal one place to the right, and that's how you get a dollar. Now, somebody else could have had more money in their account, and they was willing to risk $10. So that will look like this right here. It'll look like this: 1.00. Remember, move the decimal place 1.1 space to the right. That's how you get your 10. That's how you get your $10. So you'll do 255 1 times 10. That person would have made 25,000. They would have made. Sorry. They would have made $25,510 off that move. You know. So like it's that simple, and the reason why I'm able to come in here and identify this so quickly is because everything is color coordinated. I know that when price is below this green line, I should only be looking for sales. And as you can see, you see that it's no guessing that this is the green line right here. This is the green line. And when price is beneath it, what happened? Price went down. It went down. When price was beneath the green line, we went down. Even though at times you did have some green, but you don't buy the green. You only buy the red. Right here, it pulled back. You wouldn't buy that. Came down, pulled back. This big run up right here, I wouldn't buy because we below the green. As long as you below this green line, you're only looking for sales. That's it. Then the second thing I go and look, I look and see whether this blue line right here, did it cross below the green, yellow, and red? Well, as you can see from my entry was right here. This was my entry candle. Isn't this blue line below the red, yellow, and green? Yes, it is. Okay, the next thing I look for is this candle need to be a flat top red candle. This candle right here opened with a flat top. It was a flat top. Let me zoom in. As you can see, it was this candle right here. So as you can see, it is a flat top. It's a flat top red candle. Then the next thing I'm looking for was this meter dark red. Yes, it was. Was this white line below this dotted line? Yes, it was. Was this red line below the yellow line? Yes, it was. So that's why I took the trade right here. That's why this was my entry. Then you ask, when do I get out? You can get out when you're satisfied with your profits, or you can get out once this blue line cross back above this yellow line. And it's that simple. Now for a buy, I will only buy. Let's go over here. Let's look for a buy. All right, let me delete all this. All right, let's look for a buy opportunity. Let's see. I'm trying to look for a good buy opportunity. All right, here we go. I found one. So it's perfect. So as you can see, right here, if you go back, so for a buy, this is what I'm looking for. Price, these candles need to be above this green line. That's the first thing. So let's say I came on to the market and I saw this candle right here. So the first thing I'm looking for is this candle, is it above the green line? Yes, it is. The green line is right here and it's above it. The next thing I'm looking for is, did this blue line cross above the green line? Yes, it did. Also, is this blue line above the green, yellow, and red? Yes, it is. Next thing I'm looking for, is this a flat bottom green candle? Let's see. Yes, it is. It's flat. There's nothing sticking out of it. You see that, right? So the next thing I look for is I go to my meter. Is this meter light green at the time of this candle? Yes, it is. The next thing I look for is this white line above this dotted red and green line. Yes, it is. The last thing is this green line above the yellow line. Yes, it is. So guess what? I would have took this trade. So with a green candle, it opened from the bottom, closed at the top. So my entry would have been here. That would have been my entry. So same thing. When would I got out of this trade? Well, we do the same thing. I would get out once the blue line crossed below the yellow line. So right here, the blue line crossed below. So this would have been our exit candle. Remember, a red candle open from the top, close at the bottom. So my exit would have been here. This would have been my take profit. Let me change it to another color. This would have been my take profit. So I would have made money from $57,865 to $58,861. How many points is that? Let's see. Put the measuring tool on here. Go up to the pink line. That's roughly 1,000 points. So same scenario. If you made 1,000 points and you did a 10-cent lot, you would have made 1,000 times 10 cents. You would have made $100 off that trade. Had someone else took 1,000 points and they did $10, they would have made $10,000 off that trade. Had somebody else took the 1,000 point and did $1, they would have made $1,000 off this trade. And it's that simple. This all I do every day in the market is I just scroll through and I look for setups. I'm looking for where this green line is at. This green line is my guide. That's the first thing that I look for when it's in relation to price. You go on the daily chart. You go on the daily chart and you can see from the daily right now with Bitcoin, you can see that this candle, which is currently printed, we're below this green line. So right now, as a trader, I wouldn't be trying to buy Bitcoins because it's in a downtrend. And that's all that we do every day, all day, is we look for direction first. Then we look for our setup second. Then we make money third. So I just wanted to shoot this real quick video, just breaking down the strategy to its simplest form. I'll be doing another video in details. But like I say, currently Bitcoin is still in a downtrend. This is a good time for long-term investors to buy and hold, but for traders, um, price get back above this green line and this blue line cross back above the green, yellow, and red for me to buy. So I appreciate you all for watching, and until next time.